Hi, welcome to the Market Alert for Tuesday, 26th of September 2023. So bonds and bullion dumped, dollar jumps as shutdown and student loan cliff looms. Probably nothing. Well, you never know, do you? We need something to really ignite the market, so nothing would surprise me. Yields hit highs not seen since 2007. That sounds ominous, supporting the dollar. Yeah, the dollar's certainly being supported at the moment. And volatility has dropped yesterday because we had a bit of an up move in the stocks. They managed to, as it said, eke out a couple of gains before the close yesterday. So down to 12.45, but certainly a bit of a spark up there in the volatility. So let's kick off, have a look at the markets and start off with yesterday's Dow, work our way through to the metals, which, as I said yesterday, we're going to get monkey hammered. And silver in particular was, and that's just the start of the next leg to the downside towards the $20 level. Okay, so let's move on, have a look at the Dow. So in yesterday's Dow, we can see that the market's traded down to the 200 MA. Found a bit of support there and staying above this on the overnight at the moment. The 30-minute chart, you can see the electronic Dow was also on the weak side, and this continued until 3 p.m. when we saw the market move to the upside. Then, well, actually, it's 16:30, it's 4:30 when the market bounced back to the upside, and then managing, as I say, to eke out those small gains before the close. However, overnight the market has moved lower. It's below the DP, the 20 bar, and the 50 EMA. Needs to stay above this BRN here, which is 34,000. I've noticed that actually. 34,000 seems to be a very interesting level for this market and has been over the last few days. So it needs to stay above 34,000. If not, we could see a test of the S1 and the low there. In the German DAX, also down. We've been red for a few days now, and an inside bar overnight at the moment. Let's go to the weekly chart. Why is the market stopped at this level? Well, we've got a 50 EMA in the weekly chart where the market's currently sitting on. Needs to hold above this. If not, we're likely to go down to 15,206. So back to the daily chart there, you can see that yesterday's low was 15,328. In the 30-minute chart, we started on the upside, but then the market capitulated, moved lower, and there you'll see the market trading down again to a psychological level of 15,350. We've got a bounce back off this with the Dow. Market traded sideways and then moved back down overnight, but has bounced off this level as well. So keep an eye on this level. That seems to be quite a support for the market. If it is broken, then we head down to the low of yesterday and the S1. On the upside, we've got another psychological level plus the 20 MA, 50 EMA close and DP. So quite a bit of a battle on the upside with some resistances there. In the S&P, this also down to the 4336 area, but lower than this overnight. Again, let's have a look at the weekly chart on this one. We're down at 62% retracement. This is why I love the longer time frames, because you can see exactly where you're. You can also see how sideways the markets have been for the last few weeks as well. Same for all of these stock markets. So some volatility coming back into the market now. 30-minute chart for yesterday. Again, the electronic market up for an hour and then down for several hours before we saw the S&P move up also at 4:30 p.m. Then another boost to the upside, and then over the first part of the night session the market up, but it's since then given up the gains and is below the DP. So again, on the downside, there's not a lot to stop it as far as the averages are concerned, because they're all above apart from the 5 MA at the moment. In the FT 100 market below the 200 MA, and also overnight remaining this way as well. We've got the 62% retracement here as well with the 20 MA. That's going to be interesting. And also the low of yesterday. So we'll look at that in detail. You can see there the low will be quite supportive of the market should it move lower. Yesterday up for an hour, then down, and then back in the same sort of pattern throughout all of these markets, which you now get because of the 24-hour trading and the also global impact of any news items as well. And speaking of news items, we've got a few today. Nothing major though. S&P Composite HPI, that's out later, and consumer confidence, new home sales, and Richmond Manufacturing Index. So between 2 and 3 p.m. are the news items. In the US dollar, continuing to move higher. You see an established trend there, coming off those lows down at 100 level. We're now sitting at 105.99. So continuing to move to the upside. It's having an impact on the metals, so let's have a look at those. And in silver, yesterday, monkey hammered, as I said they were going to, and they're going to continue. They're still going down to $20 for my money. All you need is a bit of excitement on the downside in the stock market, and that will be used as the excuse to crush the price of silver. Not so much gold, but certainly silver. 30-minute chart, you can see already we're below yesterday's low, and we're going to continue lower. Where is the next downside target? Let's just draw some fibs in on the daily chart and have a quick look. So we're already through the 38, the 50, 62 is at 22.84. So trying to hold at 23 psychological level will be the first thing, but I suspect we're going to take out these lows that we see in the chart, and that's the reason I'm saying this is not because I'm a pessimist at all. It's just purely and simply that this support down here, whether it holds or not, you can see that each time the markets come up, it's not getting past the previous high. So the consensus there just technically is that it's going to be smashed to the downside. 30-minute chart already indicating that. Gold, on the other hand, holding a lot better. Nearly getting back to the high to the left, but nowhere near the highs that we saw over here with gold. So again, also showing that weakness because of the dollar. That's how you crush the gold price. 30 minutes straight down, full move there, and trying to get off the low, whereas silver's already below the low. And finally, in the gold-silver ratio, well, we just saw that tick up, didn't we? So the gold-silver ratio moving back to the upside. As I said before, we're going to break out of the upside on this as well, back up to these sorts of 90 levels as well. Again, on this side, we haven't got back down to anywhere near these lows, and they're getting back to the resistance. So up and then down in the metals, in the both gold and silver. Okay, let's see what happens during today. No major news, so the market will use those economic news items to its advantage if it can. Depends if there's anything else out lurking in the background, as it alluded to in the economic news items that we saw earlier. So we'll just have to wait and see. So with that, as ever, thanks for watching. See you in the next one.